Hey guys, I'm going to show you how to pick a great stock and literally show you how you can do it in minutes, if not seconds. You don't need to learn about its fundamental information or its mode or its profit or its EBITDA or any sort of price to earnings ratio. There's a far simpler, ruthlessly simpler way to do this so you can find great stocks and not give up your nights and weekends. And I'm going to show you how to do it. Okay, so look, people have been taught, right? People have been taught that they have to work hard and do a lot of research to find great stocks. They are being taught to find stocks that have moats and have good profitability and have good profit margins and have a competitive advantage and have certain ratios like its enterprise value over its EBITDA. Like, we're being taught this over and over. In fact, on YouTube, most of what is being taught in how to pick a great stock is searching for and doing all this research on moats and PE ratios and return on capital. That is all old thinking. And if you just notice that the thing that's most important to finding a great stock is something that none of them talk about, but that's what I am going to talk about. All right, let's get to this. Okay, 3 parts to content. I'm going to first talk about what does not work. Another way of saying that is what is very expensive and what can cost you a lot of time. Something that you can do that you think you're doing everything the right way, but you find yourself still losing money. So first thing I'm going to talk about is what is the wrong way about going to find a great stock. Then the second 2 points is what to actually do to find that great stock. Okay, so we have all been taught that to find a great stock is on the backside of a lot of research. And there are countless YouTube videos and big box advisors and pick of the month newsletters that are talking about how you have to find companies that have great moats, right? Competitive advantages, great profit margins, great ratios, price to sales ratio, price to book ratio, price to earnings ratio, enterprise value. We've been taught all of this. That takes a lot of time. A lot of time. Some people call that fundamental information. Now, let me reframe this a little bit for you. Imagine you wanted to find someone to date, someone to marry, okay? You're a woman, you want to find that man of your dreams. You're a man, you want to find that woman of your dreams. You're that man that wants to find that man of your dreams. You're the woman that wants to find the woman of the dreams. We're an all-inclusive channel here, but you're looking for that mate, that soulmate, okay? Fundamental information is like, did she go to college? Did she graduate? What does she do for a job? Things like that. Where does she live? Where does he live? What does he do for a job? How did he answer those questions on the dating app? That's information, right? That's data. But what we really want to know, we want to know what they look like. But what do they look like? Oh, this person's brave and they earn well and they've got a kind voice and energy. Yeah, no, that's great. That's great. But what do they look like? It's the same thing with looking for a great stock. All that fundamental information is just telling you about their pedigree. It doesn't tell you what they look like. It doesn't tell you what it's like when you go on a date with them. Do you even like them? I mean, look, when you go on a date with someone, you probably know in about 2 seconds, 2 minutes if they're a no. You might not know they're a yes, but you will know they're a no almost immediately. So first thing is we are all taught the wrong way to look for great stock. Okay, so if you're looking for moats and enterprise value and profit margins, I would stop immediately because you can find stocks that have those, but will still lose you money. Okay, so let's talk about what to do. You make money, you lose money based on price, right? So meeting the woman in person, meeting the man in person and spending 30 minutes with them is like looking at a price of a stock. So I'm talking about price charts here. The way to find a great stock in minutes or seconds is to understand how to read a price chart. Specifically, pull up a stock, any symbol, okay? Look at a 2-year time range of it, right? There's only 3 things a stock can do. It can be trending higher. It can be trending lower. Now, let me pause for a second. Your brain knows what trending higher and trending lower look like. You almost don't need to be trained, okay? Trending higher is clear. It's a line that's going lower left, upper right. Trending lower looks like upper left, lower right, okay? And then the third way is I have no idea what it's doing. We'll call that sideways. You don't want to buy sideways and you don't want to bet trending down. So here's the thing about a price of a symbol trending higher, okay? And what I'm not going to cover in this video is whether you look at a 1-year chart, a 2-year chart, a 3-year chart. There's a lot of nuance to it, but I want to give you the big picture that price charts are the answer that's going to cut through all the crap, all the BS, all the hype, all the fear, all the news, everything. It's going to give you that filter. So let's just think about what happens to a price of a symbol that's been trending up. And let's just say trending up for 2 years. Something's going on. Buyers are buying more of that symbol. Buyers collectively only want to buy something that's going up. So you're learning something about this company, right? It probably has figured out its business model. Even if it hasn't, does it really matter because it's trending higher? Now, I'm not getting into whether you should own it for a year, a day, a month, a decade. Okay, how long you should own a stock is a separate video, but I want you to understand that if the price is going higher on a stock, this is all you need to know, because the way your portfolio grows, the way your investments grow, the way your 401k grows, the way your brokerage account grows, the way your future has more stability, more consistency, more comfort, more certainty, is that you buy symbols. I'm not getting mad at you. I'm just making an emphasis here. You have to buy a symbol that is already, that is already doing what you want it to do. And I assume you want your symbols to go higher. So look, guys, if you want to go deep value and go look at fundamentals, fine. But rule number one, it's got to be trending higher already. Okay, so first point was what we're taught that is just not true and doesn't help us. Point number two is buy a symbol, buy a stock that is already doing what you want it to do. And the way you know that is you go look at a price chart and make sure it's trending up from lower left to upper right. Okay, the third point, and I want to make sure that I get all these points. So the third point is you've gotten all the clutter out, all the clutters out of the way, because now we're just looking at price. Okay, so now you have a symbol where the price is going higher. The second thing you want to do is you want to make sure that that price or that symbol is outperforming the stock market. Otherwise, you have no business buying it. And so I want you to think about this. Let's say the stock symbol is ABC. Okay, and ABC is trending higher, so the price is going higher. Now, I know you've been taught, but wait a second, it's going to fall. I've been taught it's going to fall. That actually is not true. One of the most stable things you can do is one of the most consistent things you can do, right? One of the most best nights of sleep things you can do is to put your money in a symbol that is trending, that is in a stable uptrend, that is trending higher. That is stability. Okay, I know you're taught the opposite, that the higher it goes, the more it's going to fall, but that's actually not true. Okay, so then the second thing is once you know it is trending higher, what's called on absolute basis, you want to make sure it's outperforming the market. Otherwise, you have no business owning it, right? Imagine the ABC stock is a $10 billion stock. Well, the US stock market is about $50 trillion in size-ish. So if you're going to put your money on a $10 billion stock and it's not outperforming that other stock called USA Inc., then you have just now invited in instability to your life. You've invited in craziness and anxiousness and bad nights of sleep and anxiety and stress and worry, all unnecessarily, right? Because that $10 billion stock, if it can't outperform a $50 trillion stock, a stock that is 50 times, 500 times bigger, then you literally are bringing in instability and anxiety to your life. So the second part to finding a great stock is make sure it's outperforming the stock market. And you can go to many stock charting websites and you can literally put in the stock you're looking at, ABC, and compare it to, in this case, SPY. And if you live overseas and your stock market is the UK or the German DAX or the Australian All Ordinaries or the Singaporean Straits Times, you can do the same thing with your own local index, or you can pick an index. So if you don't live in the United States, you can just pick the All World X US index, and it's called MS World. So that second key point is really important. You want to buy symbols. You want to buy stocks that are outperforming the market. Otherwise, you have no business doing that. But RC, it's going to come back. But RC, it's a turnaround company. But RC, it's a turnaround story. But RC, it's got good, deep value. Hey guys, the only way you make money is if the price of the thing you own is going higher over time. And I know we're taught the opposite. We're taught to go do this deep research and spend hours a night and hours on the weekend. But that it doesn't matter because the price has to go higher. Hey guys, thanks so much for being in my world. And if you like this video, you're gonna love the other videos I have at the end. Thanks so much. Please leave a comment if you have one and hit the like button because it makes a difference. Google and YouTube like that. They also like the comments because we can interact. Thanks for being in my world, and I will see you on the next video. Okay, bye.